Yeah, one, two, three. Hi, everyone. Jethro here from the Seymour team. Excited today to be able to talk about first-time homebuyers and what they need for mortgages. I've got Jerome Trail going to be joining us in a second. He's one of the consummate mortgage brokers in the city, knows what he's talking about, and it's going to help people navigate through first-time homebuyers and how to get a mortgage as a first-time homebuyer. So let's get Jerome on here, and we can say hopefully you like your Christmas theme. We got the snow flowing and candy canes. Hey,
Morning,
Jerome,
Jethro.
how are you?
Jethro. Great. How are you doing?
I'm good, thanks. I'm good. Thanks for joining us today.
My pleasure.
Yeah. So you've had a week to sort of digest last week's conversation, and we thought we'd talk a little bit about first-time homebuyers and the real estate market a little bit. The first part about this is the real estate market a little bit, and just want to kind of know what's going on in the market. And I thought I'd let people know that there are some deals to be had, but there are still multiple offers, and it's a weird market where there's two parts to it. And one is the homes and houses, which seems to get multiple offers still right now, and the other is the condo market. And the condo market, I'm just going to show you here. Let's see. Condo market here on the bottom right, you can see that the number of new listings that came on in here, Jerome. I'm just going to hide you here for a second,
Sure.
And that way it's a little bit bigger so people can see. You can see that from October to 2019 to 2020, there's quite a few new listings that came on the market, and that's sort of subsided a little bit since November, December rolled around, but we still have a lot of new listings in the marketplace. And this is for C1. So this is condos downtown. This is where you're going to find your best deals, I think, at the particular moment. So you can see how sales sort of kind of dropped quite a bit here. And the days on market is starting to creep up as well. So we've got quite a number of listings in the C1 area and as well C8, which has the same sort of graph. And you can take a look there. So if you have any questions about where to find deals in the marketplace, we can certainly dial that in. But a lot of people who buy these condos are going to be first-time home buyers, and Jerome is able to help us out and tell us a little bit about how a first-time home buyer can get a mortgage. And I guess Jerome, what are the current sort of rates that we're looking at for first-time home buyers at the moment?
We're at all-time lows right now, Jethro. Rates are as low as 1.5% on a variable product if it's an insured purchase, and they might go as high as, let's say, around 2% on a conventional, depending upon the client's credit situation. For those of you that aren't familiar with those two terms, one, insured, if you're putting down less than 20%, and you incur what's known as an insurance premium. Most people know it as the CMHC premium. That gets added to the mortgage. That allows you to get the lowest possible interest rate, but at the same time, you're paying that policy. Anyway, rates are in a range today where they've never been, and it's just a fantastic opportunity for people to get financing.
Now, is Genworth still a player in the market for insured mortgages?
So yes, in fact, there are three players. CMHC is the Crown Corporation. The second, the larger one that you've just mentioned, Genworth, they in fact just underwent a name change. They're now known as Seguin.
Really?
And then the third player, yes, is Canada Guarantee. They all charge the exact same policy premium rate, but they have slight nuances as far as different policies and programs.
Okay. And does one, as a first-time home buyer, is one easier to get than the other, or do they all have the same sort of rules in order to
good question. CMHC, which stands for Canada Mortgage and Housing Corporation, they actually changed their qualifying rules a few months ago, and they made it a little bit tougher for people to qualify, as opposed to Seguin and Canada Guarantee have maintained the old ratios. So it really hasn't impacted things at all.
Okay, good. Good. And sorry, so what's last week we talked a little bit about sort of one of the lowest rates. I think you said it was HSBC was offering a 0.99 rate, but it was only available to sort of a select group of people. Is that still the case?
Yes. So you'll notice there are always terms and conditions to every special offer. Anyway, that is an insured purchase rate. There are other nuances. I've not personally applied for that mortgage product, but most often they require minimum investments or other, I'll call it associated or ancillary financial services products that you need to subscribe to.
Gotcha. Well, that makes sense. They're trying to get you in the door, I guess, as an incentive. And so the current rates probably I've heard as low as 1.65. So that's pretty cheap. Last I checked, it was like just over 2, and that was you could borrow $1 million for like $3,600.
Yeah. So in fact, we're now using $370 as the bottom end of the threshold as far as carrying $100,000. So to your point, Jethro, you could carry $1 million for as low as $3,700.
Right, and these insured mortgages are only good for those people who are buying less than $1 million. Correct?
Correct. So once you're over $500,000, the minimum amount required increases from 5% up to 10% on that amount over 500, and they'll only actually offer it up to $999. Once you hit $1 million, you're not allowed to have an insured product.
Wow. Okay. Well, that makes it a little bit tricky in the Toronto marketplace to some degree, but there are a lot of condos under $1 million.
Yes.
Some of the condos are quite small, as you probably have come across. A while back, there was talk about banks and other mortgage lenders making it a little bit difficult for people to borrow on properties less than a certain number of square footage. I think that number was like 500. So these micro condos. Is that still the case?
It is still the case. And really, the delineating factor, Jethro, typically in the eyes of both the lender and the insurer, is if the property has one bedroom or not. So it always comes into play on studios.
Yeah.
And we have certain lenders that will entertain a property as small as 320 square feet. We have a number that have a threshold of 360 square feet.
Does that include the balcony and the parking spot?
Anyway, the reason is the marketability of that product.
Sure.
So the insurer and the lender are assuming that if they have to, in the worst case scenario, take back a 350 square foot unit, we'll say, it could be a very difficult sell for them to get rid of it.
Well, I think that's what's happening right now as well in the marketplace. So for those people that are looking to purchase that kind of product, there are some lenders out there that will entertain that. It's not as cookie cutter and not as easy of a find for you as a mortgage broker to facilitate.
You're 100% correct. Many times people will call us and the first question they ask is, what's your best rate? And then all of a sudden the rest of the story, well, we're looking at a 370 square foot studio downtown, or I'm self-employed and I'm declaring $8,000 a year of net income, or I've not filed my income taxes in 3 years. So those conversations are not necessarily what's our best rate, it's how can we get the deal done?
Well, that's a good segue into our next topic, which is what's the difference between a fixed rate and a variable rate mortgage? And it's not showing the whole thing. And the rest of it is, how do I know which is right for me? Oh, there you go.
So a fixed rate mortgage is when you're 100% certain what the monthly minimum payment is over the duration of your mortgage term. So the most commonly quoted term in Canada is 5 years. Every lender usually has an aggressive 5-year fixed promotion. And on the fixed basis, you know precisely what you'll be paying on a monthly basis. As opposed to a variable rate product, it can go up and down with the bank's overnight lending rate, which is, I'll say, dictated or governed or guided by the Bank of Canada's overnight lending rate. So as an example, when we quote a variable rate product, let's say as an example, it's 2%. Well, if it's 2%, that would be prime less 0.45. The prime rate today is 2.45 across almost every lender in the country. And as the Bank of Canada goes up, then so does that bank's overnight lending rate. If it goes down, well, conversely, so does that variable product rate. Hence, when the rate goes up and down, so does the monthly payment. Anyway, how do you know what is right for you? Well, in today's marketplace, where the spread or the difference between the two is so narrow, there's really not much reason to take the risk of a variable rate product where, as an example, in 2 years or 3 years, if the Bank of Canada starts to raise rates, there's really not much of a reason for you to accept that risk, considering that fixed rates are almost the exact same price.
Yeah. Yeah, it's kind of crazy. Back in the day, when I got one of my first mortgages, it was over 6%. I think it was 6.2, and that was a deal back then.
Yep.
Mind you, it was 20 years ago. And
I understand.
It's changed quite a bit. These low rates are just incredible. So it does allow people to get into the property market and essentially create a net worth. Most people who have a significant net worth, unless they're consummate investors in the stock market, really have done so through real estate. And it's also been a good part of Canadians' retirement fund. Not everybody has a defined benefit pension or a pension at all. So their nest egg is really in their real estate. So a lot of people have done well by it, and hopefully that continues. But these low interest rates allow young people to get into the market. First-time home buyers, certainly. I don't think you're ever going to find it any cheaper.
Jethro, you're bringing up a fantastic point of view or perspective that people rarely take into consideration. The very first month you make that payment, let's say, for instance, it's a $2,000 monthly mortgage payment. Well, half of that goes towards interest and half of that goes towards principal. So at the end of the year, after 12 payments, you've made $24,000 worth of mortgage payments. $12,000 has been applied towards principal. It's almost like a forced savings.
It is.
The second part that no one ever discusses is inflation. So the Bank of Canada is very public that their target range or target rate is 2% per year. So as an example, let's say it's a $500,000 property. Just through organic appreciation, that's $10,000 per year with inflation. You then add in the $12,000 worth of debt servicing. There's $22,000 worth of return just organically by owning the place in 1 year. It's a phenomenal rate of return, and it's tax-free as your owner-occupied residence.
Yeah, at the moment it's tax-free, and let's hopefully it stays that way. We've got a few bills to pay through the pandemic, so hopefully we'll continue to have that benefit. It's the only benefit we really truly have as Canadians. So I think the government will have a hard time taking it away, but you never really know. So those people that are looking to actually get a mortgage, how do they go about getting pre-approved for a mortgage, and how do they know about their budget? Like, what are the types of conversations you're going to have with someone when it comes to getting pre-approved and talking about their budgetary requirements, and I guess as well their debt service ratios?
Yeah, well, it all starts, Jethro, with a mortgage application. When a lender advances the mortgage funds, they're looking at three components, and there's really two that we can forward manage. That's your credit. What's your credit score? 2, what's your income? So the score is just vitally important as far as what people can qualify for, the rate, the product, and if there's anything remedial that has to happen, the sooner we can get on top of that, the better it is for the client. It could be as simple as people just not knowing or understanding some fundamental credit or revolving debt strategies as far as optimizing or bringing up their score. Anyway, it all starts with a conversation, and when people like to work together, we ask them to fill out a mortgage application, and that's when we really sink our teeth into it. Anyway,
Okay.
we pre-qualify people, meaning we actually will underwrite a file well in advance, so there's no surprise, and so people know exactly what they're dealing with. It's arguably the largest purchase someone's going to make in their lives. We invest a tremendous amount of time up front, particularly with first-time home buyers, because most often they're not familiar with what we would consider to be basic terms. So a lot of it is education, just to bring their level up to a certain threshold so they have a sense of comfort of what's going on.
Yeah. Well, that's good. There's definitely a lot of things that people have to consider when they're trying to purchase a home. I guess one of the questions a lot of first-time buyers will have is, how much money do I need to make? I guess imagine somebody not having any student debt or credit card debt, and they wanted to buy a $500,000 or $700,000 condo. What kind of income do they need? Assuming they're not self-employed, which is always a different kind of kettle of fish.
So we always put together a budget with people in collaboration. We've had relationships, Jethro, that started, as an example, in 2012 as a first-time home buying couple, and they actually purchased their first property in 2020. So
Wow.
we talk about a long, I'll call it sales cycle, but a long relationship. You really get to know one another very well. However, It all started with some credit remediation. It then I'm going to say, was directed towards optimizing their down payment situation. So to answer your first question, how do we land on a budget? We take a look at down payment and where their assets are, what we're able to qualify for, what we're able to use. And then we take a look at their income situation and we build up a budget in that manner.
Right. Okay. Well, that sounds good. And here, we'll go to the next one. What are some of the closing and transactional costs for buying a home?
The two significant ones are the land transfer tax and then the legal fees. So in Toronto, and it's with a very specific geographical description. However, Jethro, I'm going to estimate it's probably 90+% of your clients. They're going to incur what's known as a double land transfer tax. So there's the provincial land transfer tax, and then there's the municipal. Anyway, these are not small amounts of money, and you definitely need to be budgeting well in advance, so you're not surprised at the 11th hour.
Yeah, for that.
The second one being the legal fees. And the legal fees are almost a bit of a misnomer. If you were to call around to lawyers, they're not misleading you. However, they're pretty much going to tell you that to do a real estate transactions, probably around $1,200. What you have to also include are the disbursements that they're going to be making on your behalf. So there's land registry registrations, for instance. There are title insurance requirements. Typically, on a condo, the legal fees are in the neighborhood of $2,500 to $3,000, depending upon the price point.
Right. Yeah, and that is just hard costs that are effectively taxes in some ways, for registrations and with the municipality as well as the province on the land registry system. Yeah, so it does add up. I have a spreadsheet that I actually put forward to my clients that has all the items listed in terms of what it's going to cost them. They can tally up their budget. Maybe we should collaborate a little bit and work on our spreadsheet together and make it look really good.
Yes, I agree. The better we can prepare, particularly first-time home buyers, there's nothing worse than getting a call 2 days before closing and the buyer saying, Jerome, I've just received the trust ledger from the lawyer. Can you please explain A, B, and C to me?
Yeah, that's
I will always then come back to them, Jethro, and explain, I think I missed that course at grad school because reading a lawyer's trust ledger statement is never simple and straightforward. But we can usually make our way through it. But my point is the borrower, the buyer, needs to be prepared well in advance for these closing costs so they're not surprised.
Right. Yeah, well, it's there's a number of different costs, and there's also the land transfer tax, which you mentioned, which is probably the bigger nut. And there are those two land transfer amounts, which are municipal and provincial. And there, if you just Google a calculator out there, you'll be able to pull one up, and it'll calculate it out for you. If you happen to be that first-time home buyer buying over a $2 million property, there's an extra 0.5% on anything over $2 million as well. In Toronto, I don't think that was provincial. I think that was municipal. But it certainly is in play, and it adds up. There aren't too many first-time home buyers that buy $2 million properties, but there are the odd few that are physicians or people who have very good jobs right out of school or grad school.
Yeah.
So it looks like we've been able to cover most of the things. Is there anything else that we should cover for first-time home buyers?
Nothing critical other than you need to be well prepared in advance of placing that first offer. What I did actually mention, Jethro, was there are 3 components to every file in the eyes of the lender: credit, income, and then lastly, the piece of real estate. So
right.
We follow a very strict methodology. We ask the first-time home buyer to ensure that we're working closely with the realtor, meaning we need to see the broker version of the MLS listing before they actually place that offer, so we don't have issues getting an approval or commitment from the lender on the actual piece of real estate.
Yeah, it's not always as simple as people think.
No.
I'm just doing a deal right now where, sure enough, it's held up with the mortgage broker on the other side because the building is 30 years old and has something called high-tech plumbing. And insurers don't like high-tech plumbing for whatever reason. And it's not necessarily apparent when you're going out shopping for property to know, what some of the issues might be. The big ones obviously are going to be asbestos, mold, and high-tech. That people aren't going to want to have any part of, and you'll have to find creative lenders or creative lending situations. But each file is unique, as you say, and getting those MLS broker listings is important in doing that deal and understanding what is going on with the property. So we're happy to work with you whenever the file presents itself. It's great.
Yeah, we appreciate it all, Jethro. And anyway, a lot of our journey is educational. We really just are trying to help people understand what's going on before it actually happens.
Yeah, and it is heading into the holiday season. We've got snow coming in the forecast, as you can see, and it's going to be a good holiday season. Hopefully, I know we're all locked down and going to have to not see our extended families this year, but in the future, that'll all change. It looks like next year will be a bang up Christmas and holiday season. Everybody's going to have a year of pent up demand for the holidays.
Bring it on.
So, hey, man, thanks a lot. I really appreciate you coming on today and having a conversation with me. If anybody's interested in finding out more about how to get a first-time home buyer's mortgage, or is interested in looking at property or having a conversation about where deals are in the marketplace, if you're looking at condos, we can certainly have that conversation with myself. I'm Jethro, and or Jerome, and he'll be able to guide you with a lot of clarity in order to how to get a mortgage. So thanks again, Jerome. I really appreciate it, and we look forward to chatting with you again.
Thank you, Jethro. Have a nice holiday.
Yeah, you too, man.
Okay, bye-bye.
Bye. All right, everyone. Well, I really appreciate you taking the time to watch the video. If you have any questions, feel free to reach out. I hope you have a fantastic holiday season, and we look forward to helping you out in the future if that's what you need. Thanks so much, guys.